Trading requires absolute focus while keeping your perspective and your expectations in check. Hi, my name is Richard Lee and I manage the Stockradar.com.au website for you, where we run a quant strategy based on high probability signals to create a trading edge. Identifying a price pattern as a top or simply as a corrective phase is a constant out there for traders. Stocks move higher in their trend phase. Today I'm going to look at some tips on how you can fine-tune that assessment of that price action. Is it a top or is it a corrective phase? And we're going to use ANZ, as you can see today, to look at that one because it's been trading in a sideways movement for about 8 months. Okay, so what I want to first do is go through a normal course of business, overseas markets, ASX 200, portfolio, ASX stocks, and our trading tactics this week. Is it a correction or is it a top? It's quite a big thing if we're trading stocks because the stock can go up or it can go down. So we're in one of those situations we need to be very, very careful of, but we can make a careful assessment of the likelihood of the outcome. Okay, so let's get straight into the markets today. Firstly, the Dow Jones. Well, it's been a bit of a roller coaster this week. It's why we trade weekly, because the daily noise, 1 week down, 1 day down, 1 day up, another day down, it makes guesswork out of your trading pattern. So I like to step back at the end of the week and see where we finished the week. No traders are in there, the emotions are out, and we can just focus on what the current price is. So, and you can even see here with the Dow Jones, you can see there's been some big ranges over the last few weeks. If I just blow that up a little bit, you can see here, these pattern here, you can see these big lows down here, and each time it's been brought back up. So the support's been quite good for the market. So that's a pretty good sign, going forward, because we have been looking for this market to perhaps have a correction, but it doesn't seem to want to do that, and it's been very resilient in the face of a lot of naysayers. We can see some heightened activity down here by the sellers, which is a good thing because it means the buyers are absorbing that selling, and that's very, very positive. Okay, the Nasdaq's not quite as exaggerated here. It's come down, but it's held pretty well. The sellers are testing the buyer's resolve again, but it still seems to be moving along quite well and holding up nicely. So no real concern for those major indices. The excitement this week is commodities. Okay, so let's have a look at Brent crude. We've been watching this chart for a while, for a long time, and we've seen this huge rally unfold for the last 2 years. It's now moved above this high here, and it's now moved right into this R1 level here, which is our main resistance level. We've been looking at for a while, and it is punching a bit of a hole in here. Hasn't quite finished above it yet. We're really looking for a break of about 84.16 on Brent crude. It's currently about 83.18, just below that. But certainly it's making a shot, and we've got some great support here from the volume here, and we've got a little uptick in the momentum meeting. So that Brent crude is looking quite an exciting picture for me, especially if you're holding oil stocks. Copper. Well, copper, again, last night had a huge jump. Now, this has been interesting because we've been seeing the pressure on the downside from here for a while. Let me just blow up this trend for you. We've been seeing the downward pressure on this for a while. We've got these lower highs here, but we've got this stubborn support here. There's a long-term thematic probably driving this copper price at the moment. So it looks like it's going to have another shot at these highs. We've seen a bit of a bounce here to R1, a very big rally. Volume, well, it's probably going to finish higher this week. We've got a couple of more days to go yet. As to how high it goes, we'll tell a bit of a story. And as to how high the price goes, we'll also tell a bit of a story. So it's trying to reverse this negative picture which we've got here of a downtrend. So that's quite exciting, and put alongside crude, that is quite a bullish picture for a lot of stocks that we have here. Gold itself has done very little, a little bit of a bounce last night, but nothing great. It's not really exciting anybody at this stage. It's no trend, so it's just neutral. I'm mentioning some of those gold stocks like Newcrest, Northern Star, Evolution. They've all come down to some fairly big support levels, so it'll be interesting to see how they perform with a weaker gold price at the moment. But I tend to think they'll probably hold, so maybe good level for long-term buying in some of those gold stocks at the moment. But that's at your own peril if you want to try it. Okay, just quickly, I sent out a note this week on the Treasury note, just a bit about interest rates, and we can see a bit of a turn here. Here's the chart again, and you can see we're testing this level down here, this S1 level, which is fairly critical because I think from a psychological basis, if it starts to move about down here a bit, or yields in America move above 1.6, then that's going to cause a bit of a shakeout and a little bit of panic, which we saw here. And we've just lulled here, and now we're coming back into a little bit more downside here, and we've got plenty of volume happening here, and momentum certainly gone out of this. So this is not looking all that flash at the moment, but again, as I said in my note this week, the initial stages of an interest rate rise depending on the reason for it, can often be a good sign that the economy is starting to motor along and there's a bit more demand for credit. And it's not till the end of the cycle where interest rates really kick in that affects equity prices. So at this stage, the equity price is still okay, but it's just worth watching the Treasury note market in the US. And again, we can have another quick look at the commodities one, which we looked at last week. This has just been going gangbusters, and a bit of copper, a bit of gold last night helps us along. But we've pushed through this level here, which is a big 4 or 5 year resistance level. It's tested it twice on support levels down here, and it's held it, and it's still moving higher. Quite good sign. So this is improving, momentum sparks higher. So the commodities index is looking quite good, and I know there's a lot of people out there very bullish on the long-term thematic of copper and nickel and lithium and those sorts of stocks. It's a matter of how you get exposure, and Wise Mineral Resources just dropped 35% and BHP just dropped $20. So an interesting backdrop to the whole market at the moment, but there is an opportunity there. We'll just wait for it and get into the stocks when we want to get into those stocks. Okay, so I'm going to go to the ASX 200 now. Again, it is under pressure as well from overseas markets. And we've got a bit of a rotation happening here. We seem to move out of metals markets, out of some tech stocks. It's put pressure on the index. It's now come down from about 76.50 now down to about 72, 71, 7200. So it's just dropped off 400 points. The portfolio survived reasonably well. A couple of stocks haven't, but we're going to keep an eye on that for the moment. This is always a difficult stage when you get a bit of a correction here, but for the moment, the ASX 200 is holding above the old high here, and that's a good sign. A bit like the American markets, they're just holding above their support levels, which is good. A little bit of this bit of pace has gone out of the market, that's fine. We'll just keep an eye on this for the moment. We haven't got a breakdown. We're watching the average, we're watching this support level here. This is the trend challenge to turn neutral on a few stocks quite possibly. So we'll keep an eye on that. For the moment, the portfolio itself is up 1 this week to 78. We saw a big drop last week, 189 stocks covered. The 5 stock is still full with 5. The 10 stock has got 9 stocks, and the 20 stock conservative portfolio has only 8 stocks at the moment, but it's still doing okay. And the sectors we've looked at are portfolio, banks and diversified finance. They're the ones staying high at the moment. Industrial metals has fallen out, industrial materials has fallen out, and the diversified financials have moved in to that trending sector. So that's been quite good for that area. Building our portfolio, which we've done, it's up about 9% since March, so we've seen a little bit come off the top, but that's okay. The trend is up, and that's what we want to see. Stocks haven't changed much. We saw IGO come out and another stock come in, IPL a week or so ago, so that's been a bit of a change, but apart from that, not a lot of change since March, but that's motoring along quite well, that portfolio, and also considering the fall we've had, it's holding up pretty well. Okay, so let's get into some stocks now. As usual, we go first into the JB Hi-Fi just to see what's happening with JB Hi-Fi, because I know a lot of people are interested in this stock, but at the moment it's really not looking all that flash. It has attempted a rally over the last couple of weeks. But we've really got above it here. You can see this moving average. You can see this huge resistance. 1, 2, 3, 4, 5 big major tops there, all putting a big cap of resistance on this stock at the moment. And it's going to find a lot of trouble moving through there, especially as a lot of good news has been in that stock, and it's struggled to go higher. So there's certainly some price resistance on this one here, and we just want to make sure this S1 holds here, because that can proceed further forward, because there's not a lot holding it after this falls here. So the jury is out in this one. Not a lot of volume in the upside. The momentum's still sagging, so really not very bullish. Trend intensity still -8 on JB Hi-Fi. I won't dwell on that much longer. Okay, alumina's been a great stock. Again, the metals markets have been a bit different. We've seen aluminium go up and some good stocks go up, but obviously some of them haven't gone so well. So it's a bit of a divergence going on here. But I just thought the simplicity of the alumina chart was very good. We've got a very simple trend reversal pattern up here above a major high, major low for quite a few years. If I just go back and have a look here, you can see all these lows slowly increasing since about 2012. We've got the old highs up here at around $3. It came down there, and slowly but surely this mountain of support, long-term support, has held this stock up. Now we've got to this stage now here where we're looking into this market. It's had a trend reversal, it had a good spike higher here, and we've got some good volume here and good momentum. So the engine is purring on this one, as we say. Excuse me. But the last few weeks we've seen a really good spike in volume, which has really kicked the price higher, and R1 has got to be a target up here around $3 potentially. So that's what we're looking for there. We've had a trend reversal up. There we go, it says trend reversal up, and you can see the major levels we're looking at here. So alumina is quite an interesting stock that we're looking at the moment. So we're in there and hanging on to that one. Okay, now there's a couple of other stocks I'm going to have a look at. ANZ I want to look at, but I'm going to look at that later on in trading tactics, is what we're doing with that one. Firstly, I want to go to Horizon. There are some stocks which I've looked at recently that have had a struggle. They've come down a long way, but they may well be providing an opportunity. And I'm looking at something like Horizon as a potential opportunity because it's come down a long way, but we're starting to get this pattern of reversing. Okay, so we're starting to get this, the downtrend has come down from here, we can see the selling has been controlled here, then all of a sudden we get this sort of sideways pattern and some support at this level around S1, which is around 350, 360, and we're seeing some rallies off here, and the last rally we saw was on some better volume, and this last couple of days has been better volume, so this is looking very interesting. We've also got a higher low here, which is interesting, so this shift is occurring. Okay, it's a typical basic structure. The evidence builds slowly and often is fragile. So the last couple of weeks ago, we saw quite a drop here as the nerves cut it, but again, the buys came in at a higher point and it pushed the stock higher again. So it's happening. Whether it completes or not, we'll have to wait and see. Trend intensity rating is +4, so it's just holding at the moment. The indicators are okay. Volume's okay. It's just around the average at the moment, just above it at the moment. This is flat. So all this pattern here is telling us, and it's good volume here, is telling us there is this shift going on. So Horizon is certainly one to watch. Carries a lot of coal, I think, so who knows what's going to happen with the energy market at the moment, but that's certainly one for you to watch at the moment because I think we are seeing this shift and it looks like the buy and weakness situation is going to happen there. So that's Horizon, which is looking pretty good. Computershare is another one we've held in our portfolios for a while. It had a funny start to this rally, and if we look at this, the longer term picture on this one, we can see where it came down from up here. We had a bit of a bumpy ride here. This was a first trade which we got stopped out of. Then we got a second signal here that made a new high above here, and we can see the volume followed it and momentum was positive. So we've got a good trend intensity rating here at +10. It is +10 now, so it would have been about probably +8 or 9 even when it started off here. We've got the trend reversal. It moved higher, came back a bit. It's now moving higher. It's holding very well in the light of this market weakness at the moment, Computershare. So we're still looking for R1, which is the old highs, as a potential target for this trend. It's still moving up. We're steadily lifting, and it's steadily lifting and in the face of market weakness, which I just mentioned. So I think it's a very good sign. We see some great volume in this last rally, and momentum's looking good. So Computershare, shut all us out. I just look at this, and it seems okay to me. So Computershare is an interesting chart at the moment. Okay, let's go to another one which we've liked a lot recently. It's just shot higher as this, as this coal market has just taken off. Let me just get all this up here so we can have a good look at it. Right, Whitehaven coal. So we've got a break above 179 here. This is back in June, and it's just continued high. It's now 66% up in about 4 months since our entry. This was the signal, this is the rally, this is the demand, this is momentum. There's not a lot of argument with this one here. It's really just a matter of raising your stop to make sure you protect this great gain that you've had. A few people have got that in their portfolios, which is good. And as I said, this has been a real winner for us. Very quick time rally, and who knows where it will finish. Because at the moment it's still moving higher with lots of demand. Trend intensity rating is 10. So my very touchy mouse is driving me nuts. Okay, so this is, there we go, the stop rises to ensure we protect this outperforming gain. So it's a really outperforming gain, so we're going to make sure that we do protect it because it's been a real winner for us, and they are important. Okay, now the next one I want to go into is Star. This was a bummer, this one, because it didn't quite work out the way we'd hoped, as always, but this is a fact of life, and this is what happens in the markets. Sometimes you will get a dumper. And that's really what it does occur. The stock market's, nasty places. They can hurt you. They can slap you in the face and tell you that you've been a naughty boy and done the wrong thing. in this situation here, I have to do the right thing. Okay, now we did take the rally above here. It all looked swimmingly good here. Good volume, momentum was kicking higher. Again, a perfect situation, probably with a trend intensity rating of 10. In fact, it was 9 as of the close last Friday. Then all of a sudden this week, a little bit of a corruption scandal is happening there. Is it going to be the same as Crown? So I've just listed here. We just squeeze this up here. What looked like a great break, which did look fantastic, well, we know what's happening now. It looks like they are all at it, the casinos. All this money laundering and things like that, who knows, but the market doesn't like it. So it's hard to resist the lure of the dollar in those worlds by the sound of it, because they seem to be all doing the same thing. Anyway, it appears to be human behaviour, and we know human behaviour doesn't change, and that's why we look at charts. So with this chart here, it's crunched down through my stop. Again, I'm not going to get out on the daily noise. I'm going to get out on a week. I'm always going to wait for the week to finish. Sometimes it will catch me out, but more often than not, the price will come back. And Star Entertainment is a good example of it coming back this week. I think it's probably up a little bit today. It certainly hurt the market because this stop has been broken and on high volume. So it's certainly a get out factor. But it's a matter of where we get out. But I'll just wait till Friday nights, and then I'll probably, if I get the signal, I'll act that on Monday. So not a nice thing, but we need to deal with these things appropriately, okay? So that's just really how it is, because we don't want to be sitting here next week saying, what do I do? Should I still be in this stock or not? If your stop goes off, you must get out, and that's do the right thing, and then you move on, and then you're free from all that baggage in your mind, and you can trade again with some clarity. Okay, so these are nasty things, but they happen, and they must be dealt with appropriately. Okay, so let's finish on a little slightly brighter note. Let's go to Technology One. This has been a great little stock for us over the last couple of weeks. Really got quite excited here. It broke through this big area here, this big resistance area at the top here. And it's quite a nervous situation where we think, we're buying at a high price. Gee whiz. We think we're buying at a high price up here, but we entered here on the open on this Monday here after we saw the breakthrough here, and it's now kicking high, and I think it's probably a bit higher again today. And so let's just have a look at the indicators. We are well above the average. The volume has been okay, although the price has been rising, so it's obviously been quite hard to get stock, but momentum is very good. So we've got that weight of evidence that's telling us that this is quite likely to go higher, and it's certainly performing very well at the moment, Technology One. So breaking out of this big area here is a very significant move for me. It's significant. A lot of tops here. To break this is very significant. So it may come back at some stage, but for the moment, let's try and ride this wave, catch this wave until it starts to ebb off again. Okay, so Technology One is a good one. Hang on to that one if you did get it. And I just want to blow Trump a little bit here. South 32, it's up again today. It's having a great week this week. You know, the metals market's got a little bit haywire at the moment. But when you look at this stock here and you look at now what's happening down here with the volume and the momentum and then the average, you can't be anything but long in this stock. So we're just going to ride this trend and lift our stop, because again, this is going to become an outperforming one. It was entered at around about 246 in November, and it's now around 365 and a little bit higher today. So South 32 has been a really good stock for us, and again, you never can tell which ones are going to perform, which ones aren't sometimes. So it's just hold with the trend and ride the trend until it tells you otherwise. Okay, so there's some good stocks. There's some great stocks out there at the moment. Okay, so with SGR, we've done that. Technology One, South 32. Okay, so really what I want to do now is I want to go into trading tactics and talk a little bit about these corrections and these toppy patterns which we see. Okay, so correction at the top. What's your decision? Okay, let's go look at the big picture for ANZ. Okay, so first we've looked at this chart a few times over the last year or so, I suppose. But we had the sellers in control back through here, 2019, 2020. We had the COVID collapse, and then that was the low point in March of that year. Then we saw it go on to develop a nice little accumulation pattern in the form of a trend reversal pattern, high lows, and here's our resistance level. So we bought this one here, and we're still holding this one. So what's happened? So we've got this beautiful trend, impulse wave up, which is good. So the buyers are now starting to take control of this one. So this to us is now in a trend phase. The volume has been fairly good through there. So certainly when it started off, it tapered off a bit. Then we went into this sideways pattern. So we've still got a trend intensity rating of 7. The 8-month standoff here, 29.53 is the high, 27.42. We are in a drift correction stage. Well, let's have a little look at it, okay? So that's the big picture. We've been in a downtrend. We've now moved back to an uptrend, and now we've gone sideways for 8 months, which is a very long time. So at tops, what we're looking for is evidence of selling. That's pretty well the key to it. So everyone's talked about price and volume, and there's certain ways you look at it. I mean, I can look at prices going up on light volume as a shortage of stock, which often happens in the Australian market. But if stock starts showing evidence of selling, then we're going to look at this, especially if it's in an uptrend. Okay, so at tops we look for evidence of selling. The trend up is still our focus until the evidence tells us different. Okay, so I'm in a trend, I'm looking for something to tell me that I should not be in that trend. At the moment, the price is still above my stop profit point at the moment. Okay, so that's certainly a positive for me. There are 4 components I use for the trend intensity indicator. Okay, I'm going to go through these one by one so you can see how I use them. Okay, so there's price, there's moving average as denoted by the XMA, there's volume, and the momentum index, I use the MACD. Okay, so let's go through. Firstly, price. Price is going sideways, but it is in trend and it is above the stop profit. So officially it's still in a defined trend phase. Now in these patterns here, you can do one of 2 things. One is you can hold and then buy a new high if it makes a new high. Or secondly, you can just get out if you want to, if you're just a bit nervous about it, and wait for the new high to come and you can buy it. And if a new low comes, you just don't play. So it's up to you. I tend just to hold and wait for things to happen rather than to chop out and get back in. If my stop goes off, I will do that. I will get back in at a new high, but until my stop goes off, I'll hold with my position. So at the moment, the price is going sideways above its stop. The moving average is flat, but below the price still. So the moving average is still below the price. So there's still some support coming through here and the moving average. So that's certainly a positive still for ANZ share price. Volume is neutral, pretty well neutral through most of this pattern here. Nothing really significant. We've just seen a little bit of a pickup here on this correction, just bounce off this little low point here. We spent a little spark of volume. Is there a spark? Well, early days yet. We'd really have to wait and see. Really I'm in a position now. If it makes a new high, I don't mind because I'm already long. But if it does go below my stop, then I have to get out. So I'm just waiting and watching at the moment. This one still looks okay on a volume basis. Momentum is easing, but still above 0. So you can see down here we slowly decline, which is what normally happens, and it will come back to 0. And if this price keeps going sideways like that, this momentum indicator will slide straight along the 0 line. Okay, and that's how that works. No acceleration, MACD 0. Okay, so trend intensity currently is still +7, although we have had a drifting pattern for 8 months. Why? Because the trend is still up. The price is still above the moving average. On volume, there's no evidence of aggressive selling or profit taking, which is what I really want to look for. In a distribution pattern, lots of selling will occur, and you'll see those spikes down with big red bars occur. There's nothing like that here at the moment, which says a good support. In fact, the banks have been incredibly resilient throughout this corrective pattern of late. And momentum is still positive, although it's declining, it's still above 0, which is still a positive rating for me. So that gives me a trend intensity rating of 7. So really clearly what I'm looking for in these patterns when we get to high, is this a top or is this a corrective pattern? To me it's a corrective pattern, mainly because my trend intensity tells me it's that, but also because volume is not, there is not an idea of any selling going on. Maybe at the start of this you might have been a little bit nervous, but then it's come back in and there's been no real sign of any more selling there. So in summary, the trend is still up with the indicators in support. With little selling evidence within this sideways price action, we assess it as corrective rather than a top, and that the trend is likely to resume. Okay, the trend is up until told otherwise. At this stage, I don't have that evidence. So we are precariously close to a price breakdown, but not yet. The key price levels on the chart are resistance at 29.53, support is at 27.42, and my stop profit is, well, you have to look at Stockradar to find out where that stop profit is, but at the moment it's still above the stop profit line. So at this stage, ANZ still looks okay. All right, so that's really what I wanted to cover in my trading tactics for you, just to give you an idea of looking at we've got a distribution pattern or a correction pattern. So it's quite important to know that, because it does make quite a lot of effect on how you're going to approach things. Okay, so now really, so building a portfolio requires a few things: perspective, stops to keep you safe. Markets go up and down all the time. Okay, so don't worry too much. We've had a real roller coaster over the last couple of weeks, but you can see from those Dow charts and our charts, there's not a lot of movement on the weekly chart over the last couple of weeks. So that's sort of an interesting thing. So fear and greed are the monsters that shroud our thinking. Perspective is the savior that focuses you on what is important. Keep your focus, have faith in your plan, ignore all else, and the wild unravelling of the stock market will begin to make sense. Don't get caught up in every day-to-day nuance, because that will not drive you crazy. You need to really step back and get a perspective on what you're doing. I know I keep harping on about it, but I must do that because that's how I do it. So learn to jump on those trends, ride them hard, don't get distracted from the main game of making money and not losing it. Okay, good luck for your trading week this week. Thanks for listening. I hope you've all learned something, and I'll see you all next week.